Hello and welcome to the FinTech Finance Virtual Arena. I'm your host, Doug McKenzie, and on today's episode, we're going to be looking at instant payments, especially in Europe. And joining me, I have two experts right at the heart of this very vibrant ecosystem. First up, we have Dome Scafidi from Volante Technologies. Dome, how are you doing here today?
Hi, Doug, and hi, everyone. I'm fine, thank you. Thank you for inviting me here today. So like you said, I'm Dome Scafidi, so I'm Vice President of the Global Industry Regulatory Affairs from Volante Technologies. And my background, so I'm coming from my experience in the European Central Bank, advisor of Bank of England, and my team is a global team composed by SME coming from body regulatory in the industry in all the regions that Volante is covering. And our clients are 10 of the top worldwide financial institutions in the world. But it doesn't mean that our clients are just tier one. So we also support medium and small banks. And so we have the right technology, but together with the right technology, we have the experience, the expertise to support banks in the new business model that is coming from the technology, the new standard. And this is the reason why people like me and my colleagues, part of the team, are being very successful and enjoying this moment where many things are changing in the several payment ecosystem. So happy today to share my experience and Volante experience with you guys.
Amazing. Well, Dome, thank you so much for appearing. Yeah, I think we're going to get from this conversation just the significant amount of changes going on in this ecosystem. So hearing your perspective there is going to be absolute class. Thank you very much. And also joining us, we have Mark Budenheck from ING. Mark, how are you doing here today too?
Yeah, thank you, Doc. Thanks you also for having me in this FinTech Finance cast on instant payments. I am with ING. I'm the global head of transaction banking. ING is operating across 40 countries in the world. And when you talk about instant payments, and especially in the world we're living today, payments is extremely relevant. And instant is one of the key drivers for the future to move the industry towards a new era.
Yeah.
But I'm really pleased to be here on this show.
Thank you so much. Yeah, and that's another point that we're seeing payments really be the spearhead for change, not just within finance, but in so much more. So it's very exciting to kind of hear where that will be changing. Now, to kick things off, we've kind of been alluding to this brand new ecosystem in the introduction, and there's been a huge and rapid innovation in payments, especially with instant payment schemes now being in nearly 50 markets. So Dome, if I could come to you first, how critical is it now for all banks and their corporates to kind of get access to these schemes?
Yeah, I mean, it's a long journey, and we have a lot of experience coming from the different payment ecosystem, payment body regulators and market working groups. But the feedback, the feeling is always the same. So, we have the new standard. And many banks, like normally happen in every financial institution. I mean, I've been in a financial institution for 25 years, I think. And what they do normally is trying to be compliant with the new regulation, the new standard, and maybe acquiring or adding a new silos in a payment engine that are becoming more and more, let's say, in a legacy system that is 35, 40 year old. So, it's not real-time oriented. And the result is there is a lack of interoperability in domestic and international multi-rates. So it's very difficult for a financial institution to be open and to offer services and to different, let's say, schemes or automatic clearinghouse. And of course, it is once creating limit and is creating the risk to lose business instead of the other way around. So expanding the business. And plus, there is another, let's say, 2 or 3 different ingredients that are not playing the right positive way that it should be to be in line with the big change. The local regulation. So it means that a bank that is trying to send a payment or financial institution on behalf of their clients and needed to understand the regulation where this payment is going to. And we know that now, thanks to the G20 direction, we have cross-border payments. So when someone is preparing a payment that need to go from Europe to the US or Middle East, it's important to know also the local regulation. It is difficult, when we talk about filling the right fields and for all checks that need to be done, be successful here if you don't have the bank is not using the right let's say the right technology, the right knowledge. End-to-end tracking is another important point. We know that recently SWIFT went live with GPI, so the capability and functionalities to track payment means also increasing speed, reducing cost, reducing the manual intervention. But again, it's not just the service that SWIFT is offering, but the capability for the legacy system of the bank to interact with all functionalities that SWIFT is making available. And then I finished the real-time functionalities. That's of course based on what I was saying before. If you think about the legacy system that is a 30-year-old, it's difficult to move to real-time functionalities where this world is working 24/7 and payments are really fast at the same speed of the contactless transaction. So all these ingredients are still creating a lot of friction in the innovation of the banks. It is what, as a solution provider, but also in my experience in the body regulators and the working group, we are still experiencing in terms of problems that the financial institutions are facing today. This is why this journey to the innovation is taking time.
Yeah, I mean, it almost feels like it's innovating while just moving at full speed 365 days a week, which is obviously absolutely very hard to do. Now, Mark, I've also, Dome provided a very comprehensive view just there of the kind of status of where we're at and why there's friction there. But would you agree with what Dome was saying? And can you tell us a bit more about the ING story and what it was like for you guys?
Yeah, when you look at instant payments, we at ING, but I guess a number of banks are looking at what our customers are needing, right?
Yeah.
Where is this drive for instant payments coming from? And it's not coming from the regulators. It's actually coming from the market, our clients. Things that change the business over time, and we've seen that during COVID with the increased digitization everywhere, is actually the e-com business, where things are going at record speed. And you cannot have, let's say, that you order something on a Thursday morning and it's delivered Friday afternoon, that then the payment takes another day to get there. That is incomprehensible. Yeah. So one of for us, it was clear, let's say, a decade ago that we would move from, let's say, intraday processing to instant payments and then think in terms of seconds, because simply that's what society needs today. And while you saw at first, and that's interesting, you saw at first the ones who asked for this were actually consumers and not so much corporates, unless the corporate was an e-com company and immediately wanted to reconcile something that he sold with the flow of cash coming in. And that has now become and will become, to our opinion, purely hygiene. So we're making a big fuss out of it because, as Domi said rightfully so, it is difficult to get there in terms of technology and upgrading and moving to 24/7 and being available constantly. But in, let's say, 2-3 years time, and by the way, in a lot of markets, this is already common practice and it's hygiene. Like the internet is hygiene, like mobile is hygiene, this is hygiene as well. And that's the way we look at it. And that's why we started proactively, instead of waiting for something to come, a regulation or whatever, starting to roll this out in our key markets and are doing so across Europe.
Now, with that in mind, I think that's a really interesting point, seeing that shift in customer demand from the retail side of things. And now we're starting to see the corporates potentially catch up. So, I mean, while it's obviously for a bank, it's kind of like changing the engine while still moving along. What has that meant for your corporate customers now that, for instance, as you said, 10 years ago, you were looking at the demand driven from the retail customers? As we look at those larger transactions, and especially we've seen with supply chains being so disrupted over the last couple of years, what does it mean for your corporate customers, Mark?
Yeah, it depends a bit on what type of corporate customers. You see the ones that have now, let's say, completely integrated financial supply chain and are using e-com or mobile type of business. This has become one of the key factors. By the way, also having the right e-com capabilities, right? Cash receipt, cash facilities on the internet. The checkout part is also one of the things that you need to be able to deliver right now as a bank.
Yeah.
But being able to do this instantly for them, everybody's working on, let's say, a basis where you deliver goods towards your customers, and you don't want to have a large pile of goods sitting in there. So it's all the same, all instantly as well. So the sooner we can give confirmation that the money is on the way or the money is actually there, the sooner that they can start delivering. So this has impact on their working capital, right? That they need to drive the business, and that's why it's important. In more traditional businesses where it's more B2B kind of operations, slowly but surely you see also that increase in thinking coming back. But that's not that urgent at this stage. Still, large corporates who are used to think in batches, at the end of the month or at the end of the week, we send out a batch with so many requests of payments going out. They still prefer to keep on doing this on a batch way.
Right.
So what we think what will happen is that gradually also corporates start to understand what the benefits are and what they can do, including their cash management, right? So if you're a corporate operating in 15 markets and you have the ability to move your money faster than seconds, that also says something about working capital management and how you do things. So that's what we're seeing. And while in the beginning, basically every customer where we're operating and we're live, for instance, in the Netherlands or in Belgium, we have this live across the markets. Everybody feels it's quite normal. If I send you money to another bank, you get it in 5 seconds or 3 seconds, and nobody's applauding for this stuff. But you see that corporates still need to rethink what it means for their reconciliation, their financial supply chain, what it means to be open 24/7, right?
Yeah.
Today, everybody is anticipating, and we're seeing this happening as we speak. We're now in the middle of a crisis when we're talking. Everybody is used to the fact that everything is closed during the weekend.
Yeah.
But what do you do if you get 2 billion over the weekend in? Where do you leave your money? And that's the kind of thinking that still needs to be developed at most of the corporates, although we clearly see some front runners who really get this and thinking in 24/7 processes.
Yeah.
So in that sense, it will develop rapidly. We see it coming back in our RFPs, so request for proposals, where corporates are now saying you need to be instant, and not only instant within Europe or within a country, but start to think, and Domi mentioned already Swift GPI. Maybe for the record, I'm also a board member of Swift, and after Swift GPI comes Swift Go, which is a simpler version of Swift GPI with more strict rules around it, so we'll even go faster. Yeah, it's a matter of time, let's say 1 to 2 years, before you can move money around the world in instances, really in instances.
That's incredible, and that really does connect to all this. We talk about the lack of interoperability currently, but then starting to see those cross-border payments being at instant speed it's just going to be so exciting for, well, I imagine a lot of corporates. And I know, Mark, you're saying some are starting to see it, but I think we're starting to see the kind of the nature of payments change. And Domi, I'm interested to see that, from your perspective, what will offering instant payments mean for businesses that in Europe that receive a higher volume of payments, some of those ones that are already cottoning onto this changing way of paying?
I mean, that of course we needed to be aware of the benefits that bank can get from the standard and the introduction of the real-time payments. I think that Mark gave us a lot of interesting advice to understand where this world is going. And listening to what Mark was saying, something came to my mind. So when we talk about modernization and getting benefits, and so answering your question, it's not only the technology, it's the way we bank is changing. And you see, Mark way to talk apart his role in the board in the Swift and the Swift Go, that is really a great opportunity, and we are also running several projects with our clients in Swift Go. There are all the departments of the bank, like business, operational, treasury, that need to be involved in this big change. So it's not only the technology. Liquidity in real time and giving the capability to the client, to the bank, so the corporates, to pull the liquidity where is needed is a must. And that is why many corporates are switching bank where they can get this feature. But again, it's not only the technology, it's the bank. They need to understand that the bank is not just the financial institution, but partner of its clients. And I think that Mark gave us a very good, let's say, picture or what important banks like UG are already doing, and there are other banks in the market that are investing. But not all banks are at the same page. So it means that having the right technology is not enough. This is why having a solution provider and the right mentality in the bank is the right recipe to be successful in the new market, to satisfy the client's need. So talking about corporates, because corporates today are educated. I'm a member of the liquidity management working group in EBA clearing and EBA, the association, sorry. And you can see that there are hundreds of corporates. It means that corporates are interested in understanding the benefits coming from what, like you said, real-time payments, the standard. So it's not just signing a contract with the service the bank makes available. Now the trigger is coming from the client, that they want more services based on the new technology and where the payment system are going. So in other words, and then we move, is the bank need to understand the new business model, so where to get the new fresh revenues, so being partnering with their clients, and not just getting revenue from the transaction fee. But there is something more open that can be done on the bank side, thinking about the segmentation of the clients. So this is why it's important today knowing the client and what the new standard technology is making available.
Yeah. And I think you've kind of touched on something I was actually going to bring up, Dominic, because it's become a massive hot topic at the moment. And Mark, if I could come to you and see, now that we're seeing that banks are having this very different role, this increased touch point with their customers, especially when it comes to payments, because of that increased customer demand, having to know your customer more, especially on the KYB element and the AML side of things. So with that in mind, with this shift in payments and the shifting role of a bank being far more personable, but also these payments going at almost instant speed, what can be done to ensure that the payments are done in a kind of, obviously reducing fraud, but while also keeping these speeds at an incredible level?
Yeah, that's a valid point, and especially in these surroundings where we see sanctions coming from us from different jurisdictions, given the situation that we're dealing with right now from a geopolitical point of view. So it's not only fraud, but it's AML, it's financial economic crime, and everything around that. And what you see is that typically, let's say in the way we were organized, we had time, right? We had either a window of 30 minutes or a day to start looking at this. And we did that not ex ante, but post, right? Post a transaction, you simply let the transaction drop. Somebody's going to look at it at a certain point in time and then say, okay, let it go. That has changed completely, which means that the thinking around how to manage fraud and how to manage sanctions in general had to change as well. So, and there technology is playing a key role. So think about artificial intelligence, think about everything around that, patterns, recognizing those kind of things, or looking at the moment that a customer inserts the payment. And by the way, we're not doing this manually anymore, that's all via mobiles or via digital means, that is the moment to start looking at it. We even discussed opportunities with our clients where we offer our screening services that we have towards our clients, so they can do the check for us instead of us doing this for them. So those are kind of thinking that is popping up. So you go further, deeper in the chain, and you ask the chain to do these kind of things. You execute immediately all kinds of transactions and all kinds of changes. One of the things is to verify your account. That's something that Swift is also developing across the world, where you validate the account that you put in. Is this really the account that is corresponding with the right name, to preventing all kinds of mistakes before you send it. So it changes the nature of the game, but still, as part of the instant payment scheme that was developed in Europe, and when I was still part of the European Payments Council, this was a big debate. How to deal with that. On the other hand, we must not forget that only a small percentage of transactions, let's say less than 1%, is really, let's say, eligible for these checks. And then it is impossible to prevent that some of these transactions take time.
Yeah.
But what we see is that time is being reduced, the manual effort, although there will always be manual effort at the end of the chain, and you can have so much artificial intelligence around this, but still at a certain point in time, for a certain portion of transactions, you need people to look at it. Yeah, you can design your complete chain based on these exceptions, or you can say, well, 98%, 99% will go through and we'll deal with that 1%. But it did change the nature of thinking about fraud, AML, and those kind of checks.
Yeah. And I think that's a really interesting perspective, and obviously putting the an element of customer control on their payments. If there's going to be increased customer demand from what they expect from a payment, it has to kind of go both ways. They have to assume that if an instant payment's going, they need to validate it themselves and give some help in that regard. Now, continuing on from that point of customer demand, then, Dame, you have brought up, for instance, increased liquidity and kind of cash management that comes from these instant payments. But if we could dive into kind of more of the use cases that we're going to start seeing in the next couple of years, beyond just the improved transaction pace, which was obviously the key kind of motivator at the beginning. What are the additional benefits that we're going to start seeing from instant payments, and especially that interoperability side of things as they start connecting with different schemes?
I mean, I think that I saw something like 1,000 different use cases already and defined. Of course, it doesn't mean that all banks are using all of them, but I just wanted to highlight 2 points that are very important, at least in getting benefits using the new standard real-time payments. One is the real-time reconciliation. So it means that we can reduce the cost of the single transaction and avoiding pending transaction for days, avoiding clients to complain for a credit or debit that are not in the right account, the beneficiary account in the right time. And we talk about Swift GPI, we talk about Swift Go, but there is also the universal confirmation that now is mandatory. It means that, and by the way, I think that we know that Swift is about to publish the list of the good banks. So the white list means that the bank that are performing transaction in a reasonable time. Why all of this? Because there is what do we see now? More than before is transparency. So what again corporates want to see. So the benefits and use cases are coming from here. The capability to provide all information corporates need to avoid delay, to avoid goods are not delivered in the right time. And the second benefit that is coming from this one is, of course, it is very important, and I'm not sure that every bank is aware, reducing drastically the back office, so the manual intervention again, because it's very costly today to have a huge back office that is manually dealing with reconciliation, investigation, transformation, repairing payments, everything that can be avoided thanks to the new standard. But again, is an investment. As you can see, it's not only the technology, it's the right technology together with the right knowledge. So altogether, as I said, the way to bank is going to change are the two most important benefits or use cases that the bank can get today, introducing new standard, getting benefit from what the regulator is making.
Interesting. So I mean, it's really we're going to start seeing in the next couple of years this culmination of regulatory oversight, technological oversight, but then that shifting nature of a bank providing just greater services for organizations. And Mark, obviously Dome brought up obviously how important transparency would be. I know obviously, as a board member of Swift, that's obviously going to resonate very highly with you. But do you have any other additional kind of use cases or insights that really are going to start making themselves apparent?
Yeah, thank you. So instant payments is in itself important, but it enables things, right? And it's not only the direct impact of instant payments that is relevant, but also the indirect impact. It can, if you think about different products that now you've built an instant payments rails, and whether you do this domestically or intra-Europe or internationally, it doesn't really in that sense matter. It gives you, besides doing an instant payment, you can also start thinking about adding other products, request to pay as an example to replace direct debit, which a lot of consumers still find less comfortable than having control over a request to pay, where you send a message, the customer clicks, and then it's done. And you can do that while you're talking to somebody or while you're chatting with somebody on the phone. Do you want it? Yes, I'm going to send you a request to pay. And it could be in the form of a QR code or whatever. And then you click and then it's done, and then everybody knows that the transaction done. So it enables other opportunities. The other one, and that's a more strategic discussion that is currently ongoing in Europe, although it's not going that fast anymore. If you have instant payments rails, in principle, you can start using this for payments in any shop, whether it's physical or online, which means you build the basis for a competitor of card schemes, right? And the card schemes are currently dominating the world of payments across the world, I guess. Fantastic position. Lots of developments, 50 years of development in there, and there was never a competitor who was able to do this instantly. If you got instant payment rails, right, on the payment side, you certainly have created a possible competitor. And that's what the European Payments Initiative was about, and hopefully still is about, to create that competitor for MasterCard and Visa. And with that sense, and maybe also for others, think about Chinese and other players who want to come into that market. This is the way also for the existing financial industry to benefit from something that they still control and are able to bring this with light speed to what we need today. So not two steps closer to, let's say, what maybe some of the big techs are doing and some of the others, but no, we jump ahead of that. So in that sense, it's more than just the direct impacts of instant payments, and I fully agree with what Domi said. Reconciliation, I mentioned already, working capital optimization, things go much faster, but it also has strategic options. And that's the things I think that we really need to exploit here. Otherwise, it's only one aspect that we've created. There's more to do.
That's absolutely incredible. Hearing that this is just going to galvanize payments beyond the traditional rails that we've had before, but also request to pay, I think that's going to do so much for businesses to be able to actually gain control of their cash flow. And also, as you said, the trust element as well for consumers as well, actually being able to speak with someone and just being pushed the payment rather than have it pull like in a direct debit. It's going to change the way that people are going to interact with payments. It's going to change the way that businesses interact with payments. And I think we're going to view them as a result in a completely different way, which is only going to lend itself to more futuristic talks. Now, with that in mind then, Dome, we've heard about some of those huge changes. For instance, by instant payments, we've now set down almost like a gauntlet for the next 20 years to have a very different set of structural changes, infrastructural changes. But how do you optimize, and how do banks optimize these additional benefits by using the technology? Is all the technology created the same, or is actually the way to actually innovate off the back of these?
Yeah, well, this one is an amazing question if we think what we discussed so far. So there are many challenges at the bank level, because I mean, you know, we are approaching a new way to bank. The new technology is asking and giving new opportunities. So it means that the traditional silo-based 30-year-old technology is not working. So there is the need of innovation. But innovation doesn't mean just the new hardware. So what's happening is the new use cases are still taking place. So banks are investing a lot, understanding what they can build in terms of added value services. It means that in terms of volumes, in terms of the competitive SLA that the bank needed to guarantee to their clients, is still a black hole. So it means that if I'm a banker, how much I should invest if I don't know where I'm going. So one thing that is really taking off and is becoming common is a payment as a service in the cloud. So it means that the bank is focusing the business. The technology is run by someone that is expert in offering very challenging and very important SLA, very close to the one of the regulator, sometimes very close to the 100%, especially when we talk about 24/7, in order to let the bank focus in what needed to do in terms of partnership or partnering with the client, focusing his business, focusing on the added value, so that the benefit, the service that can build for their client, and leaving the technology and all the service in terms of technology and monitoring of the technology to experts. It is why with our clients we are being very successful because we are concentrating on this, leaving the bank thinking about this business. The other thing is, and again, is part of I can see that being part of our offer is being successful in the last 2 years is last mile connectivity. So it means that if a bank wants to be multi-rails, it means to have a connectivity to SEPA, connectivity to other schemes. So connectivity with the SWIFT, the SIA, again, require the right knowledge, the right licenses, infrastructure, monitoring. And again, in our past, the last mile connectivity is there. Banks, more than yesterday, want to become direct participants. Why? For 2 reasons. First of all, because they wanted to decide where their payment is going. So being the owner of the end-to-end chain of the bank is why the last mile connectivity is important. Secondly, because they can track payments quickly and of course giving more information. Because of course direct connectivity means have a rail connected straight away with the bank and the legacy system of the bank without third party in the middle. It is why many banks today, and not even the one that are with the tier ones or big dimension, are, thanks to the combination between PaaS and last mile connectivity, are exploring the direct connectivity to the scheme. And so together, last mile connectivity and PaaS are becoming the additional benefit that banks can enjoy, reducing costs, becoming more competitive in the market, because today we are talking about being competitive, and at the same time thinking about concentrating on building other value services for their clients. So as you can see, there are banks as solution provider that are becoming partner. So
I think that really lends itself into this narrative that we've kind of been touching on gently, in the fact that we're going to see a changing role between what banks provide and is it going to be more customer focused and actually the owner of the entire payment chain, and actually just having that element of trust being right at the forefront, and then the technology behind is being provided by various different partners, and we're going to see that change. Now with ISO 20022 on the horizon, and certainly a horizon that's getting a lot closer. What will this standard bring to the world of commercial and corporate payments?
Actually, ISO 20022 is not on the horizon, it's already here. Yeah. We're using ISO as a standard in SEPA, which we introduced years and years ago. But if you look at ISO in general, for the ones who are not so into ISO, what it is actually a more richer language, right? It's XML. And that means that you can put much more data in the messages. And if you're able to do that, and if you're able to do this in a standardized way, it means the amount of mistakes, the number of mistakes that are being made will reduce because there's better information. And so reconciliation cost, already mentioned, will go down. It means that because this is an end-to-end language, means that if a payment is created, let's say on the other side of the world, that transaction information will flow through the full chain, and that's one of the prerequisites. That means from, for instance, a sanction perspective, that all the information that was originally in the payment now flows through the full chain. That means better protection. So in that sense, it's going to help us not only to reduce costs, because things, mistakes are less, will happen to a far lesser extent, but it's also going to prevent us from making mistakes in sanctions if we're making mistakes, but it becomes much better to follow where the payment is coming from, where it's going through. So in that sense, both on the cost side and on the benefit side from the sanction part, that's going to help. Talking to corporates, they now will have the ability to put much more data towards their suppliers in there. That's going to help as well. If you look across the world, there's so many differences right now from a domestic perspective. In Italy, and Domi, you probably know that in Italy, there's much more rich information, or was much more rich information in domestic payments pre-SEPA than, for instance, in countries on, let's say, the more western side of the northern side, where you can only use 180 characters or something like that. Those days are completely gone. You can put not complete books in it, but you can put much more information in. And that's going to help to facilitate business, to facilitate a much better view on sanctions in general, to avoid mistakes where messages are being truncated and then get lost in translation. So ISO is going to help to create that instant frictionless environment for all of us, not only for banks, but also for corporates.
That's absolutely critical. And I mean, that timeline, as far as you said, it's already been adopted, but it's very exciting to see some of those use cases that can come out. And I always try and explore these as best I can on the Virtual Arena, because it's so often we can talk about things in a top-down manner, but not actually discuss what the benefits will be for the industry. So Domi as well, could I also get your perspective on some of the use case of the benefits to be operating on that kind of that language currently?
Just a couple of words, because I think that Mark already said a lot of things, and I think that I can't agree more with him. So data, or the amount of data available today, is the key. So it means the data analytics. We know that now we are talking about artificial intelligence, data aggregation, and again, machine learning. Why? Because all these data that are in the database of the bank are very important, like gold for corporates. Means that knowing better their client, having more information available, and Mark mentioned that there are some regions where there are more additional data, and dealing with truncation of data or valorizing that data in a different way. So making this data available for corporates. And what it means is not just making a favor to the corporates. It means identify create the new business model. I think that we said many times today in the call. So the bank is supporting the corporate in their business, and of course the services can be monetized. So is where the new business model from the bank is coming from, so from data. And then, of course, identify the new use cases. So there are confirmation of the payee and insurance support in terms of to verify the final receiver of the pension or reimbursement or other things. So there are a lot of use cases that can be identified based on data, creating the new business model, and it's coming from ISO. But I like what Mark was saying. ISO is here for many times now. SEPA came into force in 2008, and so our experience is coming from the past. But now ISO 20022 is using enhanced data, is using in the real-time payment world. So data are available, but they are, let's say, traveling at the speed of the light. So this is the big difference that requires knowledge and the right technology.
Absolutely amazing. Now, Dome, I'm also want to get your perspective as well, as you obviously work with the UK Central Bank and really interested in some of the changes that are coming from the central banks in this space and your perspective from that too, just to kind of round up the conversation.
Yeah, I mean, and as a member of the Standard Advisory Panel, so working together with Pay UK and Bank of England, the benefit is coming from there. So it's coming from all stakeholders, including corporates, big dealer, merchant, the government, and some member of the government and the public administration working together for what? To understand what doing with this data. And of course, there are banks. I don't know if I mentioned before, but the solution provider as well, people like me. So it means that if we want the success of the renewal of the entire payment ecosystem in the UK, all stakeholders need to be on the same page, listening to the different needs coming from the different business. And one of the main topics that we're discussing is the data analytics. So the data available, the big amount of data available, and being sure that this data will be available in a different payment ecosystem. So it's not just the UK. All these banks are international. So these payments are coming from another region or are going to another region. So it's important to be sure that all data are there. We mentioned at the very beginning of this session that the local regulation could be another issue. It means that if I'm sending a payment to Middle East, I need to be sure that the additional field the local regulator in the Middle East need to validate the payment is there when I generate the payment. How is possible? If the corporate is not able, the bank can help.
Yeah, and we're really going to start seeing that well, because of the technological changes that we haven't mentioned, obviously with CBDCs, and we're going to start seeing a lot more kind of discussion around that as well, and moving across cross-border payments as well, especially at instant speed. We're going to see a lot of change in the industry as well. But to kind of bookmark the conversation then, Mark, I'm interested in see your perspective as well, just if we look at it just through a European lens as well, and seeing some of the innovations that we've discussed. Is the future bright for instant payments in Europe and the continued evolution and are we going to see all these combinations of that we've discussed from central banks now, which is DOME, ISO standards, messaging. Has this been a typically European conversation, or do you think we're starting to see other regions as well that are going to be matching similar?
No, it's not a typical European discussion. You see this all over the place, go look in Asia, for instance, to the different markets, or Australia, where the new payments platform was introduced already years ago, which is not only introducing instant payments, but on top of this, identity management, and all kinds of other functionalities that are being built not only by the banks but also by other players, because it has been created in such a way that you can build APIs on top of that, and with these APIs you can enrich the field. And that's, by the way, also the thinking behind what SWIFT is doing today. SWIFT is not only facilitating SWIFT Go and SWIFT GPI to do instant payments, but SWIFT is also thinking about creating that transaction management platform where on top of that you can start building services. And not only SWIFT is able to do it, but any bank or any financial institution or even an external provider, where you can offer pre-validation, you can start offering sanctions, you can start offering whatever you can think about. And that makes the world, let's say, much more rich. I know a lot of people don't like the word platforms that are being built, but this in reality, this is truly both a technical platform, but also a platform for further development. And look, we should also be clear, there's a clear need, what I said in the beginning, there's a clear need coming from our customers that we need to do something. Banks are being seen as, let's say, not too fast in their responses, but I do think that if you look at the last 5 to 10 years, banks have picked up tremendously and now are moving with almost the speed of light. A bank will never move at the speed of light, but close to the speed of light towards these new developments. And partly that's been caused by all these fintechs that came in and said, we have better solutions than what you are doing to those. In that sense, competition that was introduced over the past decade is pushing also the bank. So it's a combination of, on the one hand, you see the market developing. Some countries or some banks go faster than others. Some are a bit more traditional. But what we've seen with 2 years of COVID now down the road, that the level of digitization across the world has increased tremendously. And that means that where banks or countries were still, let's say, a little bit behind in their thinking or in their capability, have now seen that this is an integral part of what they need to deliver. So regulators are seeing this and understanding also in the geopolitical arena that you have to create that one European, let's say, environment as, let's say, a stronghold towards what's happening in the rest of the world, right? And that's why I guess Europe has become a bit more strategic in its thinking, also on the regulatory side, and whether it's the ECB or the EU, that think about we need to work on this financial part of our business because it has the data, it has the knowledge. So let's see this as a strategic asset also in the geopolitical context. At least this is my opinion. There might be others who think about this, but I think that was clearly visible in the past 2-3 years, that Europe is stepping up the plate, moving faster. And Europe has a sort of a reputation when it comes to data and data protection. So it's pretty logic that these things now come together. So let's see, but I don't need a regulator in that sense to explain to me what the need is of clients, but sometimes it does help if a regulator sets a date on certain things, because then you can move forward. So in that sense, things have changed a bit in Europe. I guess people are now seeing that this is part of our strategic footprint, that we collectively need to work on this. But in general, it's e-com and digitization across the world that have set this trend.
Well, thank you both so much for your insights here. It's such an exciting topic, and halfway through, I think I used the phrase, it's kind of set down the gauntlet for innovation and change in ways that we haven't thought, and it's going to change our, the consumer perception of payments, but obviously how a bank evolves as well. So I just want to say a massive thank you to both of you for providing your insights here today. Also, a big thank you to our audience as well. You can catch the rest of the series and much more over at ffnews.com and YouTube, and especially LinkedIn, where you will see me in the comments. So Dome, Mark, thank you so much. I hope you've had a good time yourselves.
Thank you. Goodbye from me.
And have a lovely day.